market volatility, I read that value stocks are the place to be now. Can I explain? Okay. Well, first, yes, we are in a very volatile time. Really, since the tail end of December and going into the month of January, we have seen a lot of market volatility, specifically in technology stocks, but in general, the entire market, whether it's the Dow Jones, the S&P 500, or the NASDAQ, has had some pullbacks, and in some cases, 10%, which can be very significant. We're living in very inflationary times. We just, in fact, last month, record 7% year over year inflation. We haven't had inflation this bad for over 40 years. We've got the Federal Reserve pulling back on both monetary stimulus, where they were buying treasury bonds and treasury bills to provide liquidity to the marketplace. And the Fed is now going to finally start to raise their discount rate, which is the rate that they charge banks for interbank loans, from the 0 to 25 basis points or 0.25%, by probably 0.25%, 3, possibly 4 times this year, starting in March. So essentially, we could see up to 0.75% to 1% increase in short-term interest rates. The Fed uses this tool to both pull back on spending as well as to hopefully rein in inflation without pushing our pretty good economy into a recession. Obviously, we're still living with a pandemic. COVID is still very active. It's probably affected many of you or friends and family of yours. We're probably going to be living with this for some time. But getting back to what's a good place to be invested, all right? Traditionally, there are growth investments and there are value investments. Growth stocks are those companies that are usually on the leading edge of doing something new. They're bought and priced in based on these future either goods they're producing, like Tesla, or services that they're providing, like Zoom. And they're companies in their infancy. They're brand new. They're not making a lot of money, but they have tremendous growth in their portfolio. In other words, their service or their product is being bought in an exponential way, 25, 50% growth for that company. And people will bid up the value of those stocks, and they have very high multiples, high to price earnings ratios, all right? When discord and concern comes into the market, those are typically the first stocks that get sold off. So in other words, they go up quick, but they also fall faster. Value stocks are what we like to call older economy stocks, Caterpillar, AT&T, Exxon, or all these sorts of companies. These are companies that have truly proven track records. They build, products that we've been buying for years or provide services that we've been using for years. They have earnings histories, lots of earnings histories. Many of them pay dividends. In other words, they're much stabler. We can count on these sorts of companies. And whether they're big or small, value makes more sense than growth in volatile times. So in other words, value investments, and we believe in value investments, and we believe in dividend paying investments a great deal here at the Retirement Group, make a better alternative right now, especially in these volatile times. So that's something to keep in mind. And again, if you'd like to talk to one of us, we'd look forward to that opportunity.